I am an ardent believer that the only people who can execute banking as a service properly in the compliant manner are banks. And I posit to you to take it a step further. If you have all these partners on the front end, you have access to all the data on your client, why wouldn't you create a product, let's say a deposit product for Arjun, where instead of paying you an interest rate or profit rate for whatever, $10,000, $50,000, $100,000 you deposit in it, I pay you 10 cents every time your data is pinged.
We've got a special guest in town all the way from Singapore. His name is Kelvin Tan. He is the CEO and founder of Audax. What are the 2 or 3 learnings for banks here who are embarking on a banking as a service strategy based on your experience in Southeast Asia?
You needed an infrastructure when you're going this route of embedding yourselves in large ecosystems. Infrastructure that will support tens of millions of concurrent users.
Welcome to today's episode of Couchonomics with Arjun. I guess we've got a special guest in town all the way from Singapore. His name is Kelvin Tan. He is the CEO and founder of Audax. I don't think I can do justice trying to explain what Audax does. So first, let me welcome Kelvin.
Thank you, Ajun. Very happy to be here.
Well, welcome to the couch, but it's not the first time you and me are sitting across the table, right? We did this at Singapore FinTech Festival, which was a much more abbreviated conversation.
Yeah, that was just 6 months ago.
It was just 6 months ago. Yes, you're correct. But so, welcome to Dubai, welcome to the couch, welcome to the show. Tell us what Audax does.
Well, Audax effectively built a bank in the box. We can get any bank or FI to deliver on a greenfield, a brownfield implementation of a digital bank, or a banking as a service capability. These are all use cases on the back of the same digital banking stack. Our bank in the box consists of everything from the front end, which is the mobile app, the SDK integration, the CRMs, to the middle layer of the customer journeys, the data interfaces, the real-time analytics and reporting, to the back end of a product engine and observabilities of the stack and operations. So with us, and maybe a credit decisioning engine, a issuer processor, you get to market in 6 months of a full digital banking stack.
Okay, so I like the whole concept of banking as a box, right? But what's the DNA of Audax, right? So I think you came out of a bank, and I'd love you to sort of give me a bit of the context too. So give us the journey in terms of how Audax came into being, and let me ask the second question itself, right? You can be a lot of things for a lot of people, but is there a DNA that you guys strongly represent?
Absolutely. So the story of Audax really started in, say, end of 2017.
Okay.
Right. And at that point in time, I was an employee of Standard Chartered Bank. I pitched the idea, and this was way before embedded finance, and banking as a service was part of the official lexicon of fintech. Right. What I said was, look, Standard Chartered has got 30 licenses around the world and more. Why wouldn't we, in a bid to lower cost of acquisition and lower cost of servicing and create scalable balance sheets and significant increase on return on equity, white label the entire bank globally? Mm-hmm. Right. At this point in time, remember 2017 was the advent of large ecosystem players, right? The e-commerce players in Asia and South Asia, and even here in the Middle East, Souk and friends have just started. You have the social media players, you have the OTAs, all of whom were looking for simple embedded finance. Well, now we call it embedded finance. At that point in time, we didn't know what
simple
to call it.
Financial services integrations.
Integrated into their ecosystem such that it was seamless, right? They all wanted to replicate the Uber checkout experience, but in multiple forms. So given that trend, I said, why wouldn't we white label the entire bank? Now, as part of that journey of creating the business model of what is now known as banking as a service, we looked at the back end of the bank because we really needed an infrastructure that could support not tens of thousands of concurrent users who are logged on at the same time running transactions. You needed an infrastructure when you're going this route of embedding yourselves in large ecosystems, infrastructure that will support tens of millions of concurrent users. Yeah. Think of the countries we're looking at, right? Yeah. Indonesia, Malaysia, Thailand, GCC. These are huge markets. It's not a Singapore or Hong Kong, right, so to speak. Now, on the back of that evaluation, we realized actually that the legacy stack of the bank would have challenges. We couldn't plonk an API layer on top of it and try to execute this. Okay. So I went back to the bank, to the management team of the bank, and eventually asked for funding to be able to rebuild the back end of the bank. Okay. Which is what we did.
So Kelvin, I'm going to stop you. When you say the back end, do you mean the engagement layer, or are you talking about the core?
So we created everything from, as I said earlier, the mobile upfront, the SDK to embed in partners, or the web pages.
I get the layer up front,
All
which
the way.
is, and so you have the engagement layer, you have the integration layer, and then I guess the core layer. So you're saying you went through the whole. Okay.
We pretty much went through the whole thing. Now, obviously, because when we executed the use case, which was banking as a service on an existing banking license for Standard Chartered, we needed to make sure that whatever customer gets onboarded through this new vertical stack reconciles with the existing core and customer master of the bank. So the bank, the Standard Chartered is my client now. They define the relationship of the databases between the master and the slave. And then we make sure that the reconciliation happens, according to regulatory requirements, real time or batch, depending on what they need. But net, we built a new bank inside the bank and then took it out and commercialized it now in the form of Audax. Audax is a technology company with a bank-in-the-box stack that sells to banks. Our unique DNA, like you rightly pointed out, is this. Other than the features and functionalities, which everyone talks about, we are built in the bank and understand very intimately the sophistication, the complexities, and the regulatory requirements of delivering a full banking stack.
Okay.
And we've done it in 2 countries. We've done it in Indonesia, we've done it in Malaysia, and shortly we will announce a third market, not just for Standard Chartered, but for a third client. Uniquely, we have delivered a full banking stack within a complex multinational banking environment, both with a global regulator and a local regulator and a regional lens of how this works. We've delivered it in countries whereby the infrastructure tends to be a challenge, and therefore we are also infrastructure agnostic by design. We had to deliver it on-prem, we had to deliver it in public cloud and in private cloud because of the markets that we have chosen, Indonesia and Malaysia, and a third country to be announced. The third piece and the final piece whereby I think we have a massively unique DNA is we are backed by a bank, and therefore and it's a big global bank with a massive network. So we also bring into play the best of class learning from all of the deployments in multiple countries and how to get there fast. For example, Indonesia was our first country. Took us a little while because we had to build it and deploy it. It took us about 18 months all in for the end-to-end stack, which was still light speed relative for banks. The second market, from the first engagement of, yes, we're going to do this, to the stack went into production, was all in maybe 7.5 months.
Okay.
Right. And we hope to get that timeline much shorter. The complication largely is with connecting to local data sources. The actual application deployment is much shorter than the 7 months.
Agreed.
Yep.
So just for the sake of the discussion, we're gonna zoom out of Audax for a second, right? I want to explore the whole concept of banking as a service a little bit more with you, right? So obviously you're seeing banking as a service. You saw it from a individual bank's perspective in terms of Standard Chartered and what you did for them. What's your take on banking as a service? Do we actually firstly have a universal understanding of what banking as a service really means, right? Second part to the question is do you see a number of banks go down the banking as a service model, or do you think a particular type of bank is better suited to sort of do it, right? And thirdly, do you see this becoming a global phenomena, or us consultants just going to write a lot of stuff that is global, but actually it's not that global? So 3 questions. I think they're all related. So I just wanted to kind of open it up for you to sort of, give us your views on all these questions, because I think they all lead to the same place, arguably.
So if you ask someone what banking as a service means in different parts of the world, in fact, if you ask anyone what banking as a service means, you probably get the same number of answers as the number of people you ask. So my opinion on this matter is that banking as a service is a very clear definition of a business model. It is not a technology solution, it is a business model. And it is the business of providing banking products in somebody else's ecosystem, in a nutshell. Now, obviously, there are many ways to execute this capability. I am an ardent believer that the only people who can execute banking as a service properly in the compliant manner are banks.
Okay.
That's one way of doing it with an EMI license or basically workflow and coordinating payments and running the products on the back end with the bank. But fundamentally, that business model has challenges in that you are banking on volume, that's one, And two, you are banking very much on the fact that your partner bank at the bottom never gets its act together from a technology standpoint. What happens in the US with Synapse? Evolve Bank and Trust got its act together and effectively went direct to Mercury. It's a massive disruption to the intermediary layer. I would argue, in a lot of senses, that that's probably the first step to validating the business model for banks to step up. To take that further, the reality is, if you look at digital banks in general, there's a lot of literature on it. And BCG released a really good report on digital bank, I think a year and a half ago, give or take. There are only, I think, 11 profitable digital banks.
Over 500.
Out of over 500, something like 11, right?
Yeah.
Of which I think 8 of them sit in Asia Pac. And
most of them are attached to an ecosystem.
Correct. That was my point. So with the exception being Nubank in Brazil, and Tinkoff in Russia.
Yeah, and Oak North, which is an SME. Yeah, there's a handful of them. Most of them are part of
correct.
ecosystems.
But everyone else is really banking as a service. Now, one of the key things I always find interesting is that whenever there are panels and conversations around banking as a service in most places, most forums, nobody talks or nobody invites the world's largest banking as a service player, WeBank in China.
Well, we did on my Singapore FinTech Festival roundtable. They were there actually, but we'll come to them later.
Absolutely. Yeah. 400 million users.
It's crazy numbers. Yeah. Let's not even.
Kakao is profitable in a year and a half.
Yes.
So I see it as banking as a service is innovation from a distribution and servicing standpoint for a financial services product.
Okay.
It lowers your cost of acquisition to something minuscule, right? 10-15% of what the traditional bank would have incurred. And your cost of servicing comes down to like 20% of that, which it basically means you can effectively onboard a customer whose balance sheet is half the size on an individual level of a traditional bank customer and still make more money on the back of that.
Agreed.
So my sense is, to answer your question, the global trend of banking as a service is actually increasing. Right, there are more banks thinking about these alternative business models, and the two macro trends inform this. One is an increasing pressure for better return on equity on their retail and SME balance sheet, and two, all banks pretty much around the world have kicked the can down the road for the last 15 years on tech modernization to build scalability to enable the first. I think that has become an interesting, synergy now, and we'll see a lot more of these conversations.
And I have no doubt, but just to the fun part is obviously the journey from A to B, not necessarily the B bit of B bit part is fun too, but I think it's the A to B. Let me frame a couple of questions to you.
Sure.
So yes, I appreciate banks have modernized their technology, but they've modernized it from the context of, can we get a little bit lighter in terms of our legacy structure? Can we innovate a little bit faster? Yep. But they still love to own the end-to-end chain of the way they engage with the customers, and especially the big banks, right? You introduce banking as a service, right? I personally think there are two challenges immediately in a bank, which is legacy mindset. Forget legacy infrastructure, right? Just legacy mindset. First is this word disintermediation, right? And disintermediation doesn't necessarily mean a bad thing, right? Because as you said very correctly, if I can onboard 10x more customers by disintermediating myself and having smaller share of the pie, but I've grown 10x, the math should play out, right? Having said that, bankers don't necessarily think in that way. They feel disintermediation is a finality, right? It happens and then God, what's going to happen next? And secondly is that you have to coexist in a technology environment and a stack which is still servicing the core bank, if I may say so, which goes a lot beyond retail banking, right? Because let's be honest, a lot of the BaaS use cases currently are retail and a little bit of SME. But, the corporate banking side, I think, you'll give me an answer. I'll ask that question separately. How do you think banks overcome that? Because I know that's not a technology player's answer, but since you've come from a bank and you've lived this entire journey, both as a professional now as a fintech founder, do you think it's possible? Like, where are the examples of banks haven't done that successfully? Kakao is a new bank, let's be honest, right? VBank is China, and China is unique. Where else are you seeing this happening, where these coexistence can happen?
So the only way this works is if you set up an adjacent stack to your BAU, because, re-engineering your BAU to do this is a hope and a prayer, shall we say. And it has to be an adjacent stack that creates a new business model, that creates a new balance sheet, and that syncs backwards.
So isn't it just better to just spin it off entirely? Why keep it within the bank?
Because you need the license of the bank.
Which you can, right? So
Yep.
you can create a bank within a bank and still sort of have the governance, right? So
Yes.
at the end of the day, you can still have the license, you can have the compliance cover, but you still need different mindset of people.
Absolutely. So if you ask me what are the two key enablers of a banking as a service model, is one is the right partners on the front end. That's very important. Partners that understand the mutual benefits of the model, that will support you in terms of execution. And two, mindsets of senior executives that have basically say, I will ring fence this business separately, and I will ensure that it runs on a different set of metrics and a different set of ways of credit underwriting risk, for example, on mass market at scale with alternative data, given that you will have multiple partners. Where have I seen this? Obviously, I'm biased. We've done it for Standard Chartered in Indonesia and in Malaysia. SEB, embedded with Chris Malmer in Sweden, I believe, have also done it very interestingly. I think Vodeno has kind of done it with for Ion Bank. They have a much more interesting model because they've set up Vodeno as a separate intermediary, but it's a subsidiary of Ion Bank. So slightly different, but still a separate and distinct stack riding on a single license with a different management team specific to those metrics.
Okay.
Now, to your question, and I think this is a very interesting point where legacy bankers or bankers with the mindset that if we provide banking as a service and the end user experience sits on somebody else's platform, we are disintermediated, and that's the end of days, effectively, in terms of our relationship with the client.
Yeah.
So I posit this hypothesis to you. I think banking as a service, as a business, as a distribution innovation, forget about business model. Distribution innovation is step one of a larger play if you were, a very ambitious
And you
CEO.
want to go beyond banking.
Way beyond that. So think about it this way. You set up a technology stack that runs real-time scalable data. You then plug in partner one, let's say an OTA, right? So travel. You plug in partner two, which is an e-commerce platform. You plug in partner three, which is a social media site, Facebook, whatever, on the top three. Which means you now generate, say, 10 million customers off the bat, right? Who are onboarded on your platform. Balance sheet sits with you. You now understand what they buy on their trips. You now understand where they go on their trips. You then know what they post on social media because you have access to all that information, and you have the scalable data layer to run that access, create Gen AI models around it and a whole bunch of stuff. What stops you from creating completely new financial services products and services that are not RWA accretive? You don't lend. There's no risk-weighted asset. What you do, which JP Morgan is taking a stab at, quite interestingly, and I spoke about this a couple of years ago, and I was fascinated to see that JP Morgan is monetizing their user data to advertisers. That's one way of doing it. And I posit to you to take it a step further. If you have all these partners on the front end, you have access to all that data on your client, why wouldn't you create a product, let's say a deposit product for Arjun, where instead of paying you an interest rate or profit rate for whatever, $10,000, $50,000, $100,000 you deposit in it, I pay you 10 cents every time your data is pinged. Because I sell it to an advertiser, I sell it to some kind of research company and so on and so forth. That's one. So on the product side, there's innovation, and that's one way of doing it. On the other end,
The data monetization.
yeah. On the other end, what stops you from creating dashboards, user experiences, and essentially circumventing the likes of AC Nielsen and provide it directly to FMCG companies? Right? Become a data intelligence company. So not only are you a bank with a balance sheet and that runs customer experience and provide financing and mass market and financial inclusion, you also create alternative models which are massively ROE accretive.
I can't disagree with you on anything, right? Because I think there's a logic behind everything you've said. But how do we take this beyond Kelvin and Arjun on a late Wednesday evening in Dubai talking about it? Right? Banks have struggled to provide us a simple mobile app, right? Which still does not work sometimes when you press a button. Okay. How do you go from that to everything that you've just painted? And yes, there will be one player, there will be two, maybe there will be five, and there'll always be pioneers on these things, right? But by and large, and again, I'm happy to be proven wrong because I'll be very happy to be proven wrong. I personally find that there will have to be a seismic shift in the way management operates, in the way talent is brought in, because you're talking about a very different cohort of people.
Yep.
Right? You're talking about people who look at risk very differently. You're looking at people who look at regulation very differently. You're looking at people who look at data very differently. Let's be honest, banks have had a lot of data for a long time. They still can't underwrite SMEs. Right? Like, let's be true. We still are, every year I read a report out of every market in the world, the SMEs are underserved.
Yep.
Okay, I've been in this business for 20 years. SMEs are still underserved. Okay, we have exponential more data. So again, I don't want to be anti-bank. I personally think, I saw something very interesting happening in America about 5 or 10 years ago when sort of banking as a service first came around there. And it actually came around on the back of no open banking regulation.
Yep.
It was basically market forces, right? And I started seeing that there were these banking institutions which were coming up, which were purely just banking as a service players. Right? They had their, whatever you want to call them, charters, right?
Like Green Dot, for example. Like Green Dot, for example.
Yeah. The other one I works with a firm, Cross River.
Yes.
Right? And so I kind of went, this is interesting. So there's a whole new school of banks which are spawning, right? They are very focused in enabling embedded finance, and therefore embedded finance came around. People love embedded finance because it solves the need, it solves the problem at the point of the need.
Yep.
Right? Whether it's payment, whether it's lending. Now, we might like BNPL, we might not like BNPL. The concept is not about BNPL. The concept is you get that credit when you want it most, right? And it's end product linked. So what I thought, hey, guess what? You now have all these smaller banks, right? And the way I saw this was that there are a number of these banks in every market which I believe are stuck in purgatory. Okay, right? They, as long as the regulators are nice enough to them and kind enough to them, and the markets allow the difference at which they're lending, at which they're taking in deposits. Yep. They're able to maintain some decent amount of money, and they carry on. And for some bizarre reason, the US has 4,700 banks, right? Germany has a huge number of banks. I said, this is a great opportunity for a lot of these banks to actually reinvent themselves, because they would be ideal. They have the charters, they have small enough balance sheets, they can be nimble enough, they can change the management team if they have to, and bang, that goes, right? It didn't entirely happen in every other part of the world, right? The big banks got into embedded finance, right? DBS got into embedded finance, is into embedded finance, maybe not as much as we might like to. Here in the Middle East, we started having the big players talk about embedded finance. And I started saying, hold on, guys, co-brand credit cards are, in my idea, not embedded finance, even though you've made the credit approval much faster and you're able to do things at the time. So again, I come back to you. Do you see a certain type of banks, not from a cultural perspective, I talk from a size perspective, are they better off adopting BaaS, and will they accelerate through? Are we going to see a little bit more of the America in the other parts of the world? Or you feel that the big banks will rule the banking as a service market?
I personally feel that there is no discrimination with regards to the size of the banks and their proclivity towards a banking as a service business model.
Okay.
I'm seeing that more and more progressively minded leaders are taking the helm at many banks, both tier 1, tier 2, and tier 3 across the world, and thinking about embedded finance as a way of scaling. For tier 2 and tier 3 banks, it makes a lot of sense, right? There is less conversation around cannibalization. Tier 1 banks tend to be huge and bureaucratic, and therefore discussions become a little more complex. But that being said, I do see a lot of tier 1 banks having conversations with the likes of us in terms of enabling those capabilities for them. In fact, the question of, all of the conversations I talked about in terms of monetizing data, how do we even get there, right? And that was the reason for existence for the creation of something like Audax, because the way I think about it is, once there is the right mindset in place, or at least the right progressive leader to try to challenge the business models, the technical platform for that needs to be ready and available in order for them to make that happen. So part of my idealistic self is saying, I've created the platform, I'm going out and talking to banks, I'm advising them on the conversation around how to build their embedded finance capabilities, and pushing the envelope from a vendor standpoint to create more embedded finance banks around the world. So I don't think there's a discrimination on the size of the banks. It's usually a approach mindset issue. Although, that being said, the size of the banks increase the complexity of bureaucracy, which then changes.
And that's where my argument is coming from. My argument is coming from not a technology perspective, but the complexity, the size, the scale, and so on, so which makes the decision making. Now, let me bring another angle, and you'll tell me whether my hypotheses are correct or not. So, we're seeing across the world open banking, open finance come around. Mostly disappointed. Right, like it hasn't really delivered to the promise. On payments, I agree. It has account aggregation. It has access to a single view of your information, which is account aggregation. It has, right? But do you see open banking as a catalyst because banks are being, I guess, obligated or encouraged to open up access to customer data as a catalyst to them coming into BaaS? Or you don't really see the correlation?
I actually don't see a relationship between the two, right? So if you think about it, open banking fundamentally is about the customer's right to determine when their data is used and how it is used at their convenience, with obviously the right intermediary layer and security considerations. Banking as a service is a distribution strategy and a servicing strategy to lower costs and increase return on equity. Right, and embedded finance is actually a description of a user experience.
Agree.
So the three are mutually exclusive. They're not mutually exclusive. They can happen at the same time, but they are not dependent on one another. So whether or not you have an open banking regime doesn't stop banking as a service.
It doesn't, and in the US that is an example. My question is, does it accelerate it?
I think it accelerates it insofar as it pushes incumbent individuals to think of different ways to monetize and engage customers in different platforms.
Because it's also about data, right? Because the fact of the matter is you don't want to be the net provider of data. At the end of the day, you also want to be able to say, right, if I'm going to give away data, why don't I ingest some, produce some more products, and so on and so forth. So my hypothesis, and I think you and me have spoken about this in the past, is I do see a symbiotic relationship between open banking type regulation, encouraging new business models. Banking as a service is just one of many that the banks can adopt, right? There is obviously this beyond banking model like a Tinkoff, which is about how do we add more services to the bank and go down the super app model. And if you have banking as a service, then as you said, why am I not actually offering banking products, not just payments, through non-FIs? And that's where the whole embedded finance story comes up, right? So my question then comes back to embedded finance, right? Lots have been written, $7 trillion of value. I lose the amount of trillions we talk about in banking. I don't think there is an absolute, nobody's actually sat down and said, what is the absolute value of every disruption? And I think the number will be worth so many trillions that we don't know, because AI is creating trillion, blockchain is creating trillion, BaaS is creating trillions. My logic is, but there isn't that much of trillions to go around.
And yet the global economy hasn't grown by a trillion.
Yeah, exactly, right. So in any case, so whoever we want to blame, we'll blame them separately. Now, embedded finance is very interesting. Payments took off naturally because, in effect, it made perfect sense, right? People want to make payments invisible. It's a transaction thing. We're moving to a digital world. Payments had to replace cash, so being embedded made sense, right? We've struggled since then, right? Lending products came around. BNPL was sort of the poster child of embedded finance, a naughty poster child, as I call it. I actually like embedded finance because I think it addresses a liquidity issue, not necessarily a funding gap issue. Should it be regulated? Yes, to an extent. Should it be regulated like a consumer loan? Maybe not sure about it, because I think this is at the point of need and for a specific purpose. But again, I'm not going to get into the quagmire of what should be regulated to what extent. How positive are you on embedded finance in its truest sense? Savings, wealth, investment, lending, truly achieving the potential of 7 trillion, I'm just joking, or becoming substantive that everybody says, something, this has changed the way we bank?
I think the real potential of it is there. I mean, one only needs to look at China to see how that works. At scale, profitably, massive margins, and a massive ecosystem. You could, this, right? You could take an automobile loan or mortgage loan in China and not know that it was funded and financed by WeBank.
Yeah,
absolutely. And I think that's relative, or at least contrary to popular belief. I think that is actually the guiding light of what it could be, around the world. And we are all taking baby steps in that direction as we speak, across most countries around the world, right? So will it fulfill the $7 trillion number or whatever trillion?
No, I think it's whatever
doubt.
trillion. Is it big enough? Will it be substantive enough that, we're going to be looking at banking in a very different way?
Yes.
In the next 5 years. I don't even want to say the next 20 years.
Yeah.
I don't want to work more than 5 years. I don't know what your plan is. Right? You're a founder. I'm sure you're looking for a big exit round sooner enough or later. But in the next 5 to 7 years, are we really going to see things beyond what we're seeing today being finessed a little bit more?
I think we'll see a lot more experimentation in the next 2 to 3 years. I mean, just for a sense, we've only been live as a separate entity for 6 to 7, 8 months.
Yeah.
And already we are talking to about 5 to 10 banks on how they could execute their banking as a service embedded finance ambition.
But what about the embedders? So I know the telcos have been talking, and telcos have always wanted to be a bank. You can go back to millennia, right? I used to work for a retailer. I think I sort of was the pioneer of embedded finance in this part of the world, except I did not know how to spell embedded, but because there wasn't that word, right? As you just said, we didn't know what BaaS, embedded finance, meant about 5 to 10 years ago, right? Are you seeing more and more of those players saying, we want to get into financial services, even if it doesn't require us to carry risk because we have data and we want to, because see, everybody wants to monetize data, right? Like banks want to monetize data, retailers want to monetize data. Are they talking to you?
They're not talking to us. They're talking to our clients, right? Our clients are banks. We provide the capability for them to run the business model.
But why not? Why aren't they talking to you? Why isn't a retailer coming to you and say, build me my layer, and then what I do is I disenfranchise these balance sheet providers. I can go and get payments out of that guy. I can get lending out of that guy. I can get whatever else I want to get out of that guy.
So a lot of them are doing it, but they're not coming to us purely because that's not my business. My business is enabling banks to plug in the other way.
So as a sector, you're seeing that you as Audax want to stay focused on your customer segment because of strategic reason. I sort of get it.
And they get capped, right? So a lot of the retailers or basically any front end player who wants to do this get capped because regulatory, it's always an impediment, right? Getting the license to do it is a massive impediment, and it's expensive. It's massively capex intensive to build for them. So a lot of the retailers and front end players come to the same conclusion I've come to say it's better to partner with a bank, let them run the entire banking process and regulatory.
I totally agree, but why can't we have the orchestration layer? We're doing it in payments now.
You can.
So why can't we have a lending orchestration layer?
And they do. So Atome does it in Southeast Asia.
I used to work with Atome actually.
Yeah. So you can do it, right? But at the end of the day, do you then go after the license to underwrite that risk? Maybe, maybe not. And if you do go after the license to underwrite the risk, it is extremely expensive capital.
Yeah, I don't want to get so I want the milk.
Correct.
I don't want the cow, right?
Correct.
In the sense. So as a retailer, Arjun, you talk to the regulators too. Let me ask another complexity. I want to see where the regulators' head is. Data is going to become data is a multi-industry topic, right? It's not just financial services because it's data, right? Are regulators talking to each other? And I don't mean cross-border regulators. I mean the telecom regulator to the financial services regulator. And I personally think this is where the big challenge lies in terms of this, democratization of financial services is those regulators hardly ever say hello to each other. Not that they don't like each other, but, they go like, I'm a telco regulator. I regulate whatever travel, logistics, transportation. Do you when you speak to the financial regulators, does this come up in the conversations at all?
No, to be fair, I don't, and I have very limited knowledge of this particular aspect of it. I spend most of my time helping my client banks talk to the regulators, providing artifacts to help them convince the regulators about the security of the models that they are about to embark on. So no, not really. But from the little experience that I have in terms of helping Standard Chartered with its partners on the front end, there is very little cross-pollination of conversations between regulators that I can see. That is evident to me. But that being said, I think all regulators have the equal stringentness in terms of data protection of the countries, of the citizens' data within the country. I mean, Indonesia and Malaysia are pretty similar, and the countries that we have looked at, especially in this region, are also pretty similar.
Our data residency laws are...
Exactly. So while it may not have been evident to me, they may have collaborated on the back end. I don't
Yeah,
know.
I actually think that's going to be a big challenge, and we're not going to solve for that here. But I just wanted to pose the question. I don't know if you had seen any evidence, and it's fine if you haven't one way or the other.
Yep.
Let me circle back to Audax, right? You said you're a bank out of a box, okay? Which means you provide all those layers. Traditional banks are used to traditional infrastructure providers. Nimbleness, innovation is critical, and a lot of people say that legacy monolithic infrastructure impedes innovation. I do agree, but it does give stability.
Yep.
Right? What sort of conversations do you have when you get into the core banking conversations with banks? Is there actually a willingness for them to move away from their core, or are they all saying, okay, we'll minimize our legacy core and let you build everything around it? So I just want to ask that question.
So in most cases, what they are saying is they like what we have, and they like the fact that it's nimble, adjustable, configurations are flexible, put it as an adjacent stack. On the existing license, we have to integrate with your customer master, and that customer master may or may not sit in your core, depending on what kind of core you've got. But from that perspective, I think it's not so much a real discussion, right? I'm seeing a lot more banks thinking about how do we get bigger, more nimble at scale, rather than say how do we, the stability of the existing core is a real consideration. And it's not like the new core banking providers like our partner Thought Machine is not stable. The fact that we actually deployed at scale in a global bank demonstrates our ability to be able to be compliant and stable within the requirements of bank.
So it's good you bring Thought Machine, because I was going to come to the next question. So what is this relationship? Because I want to understand, because you're a bank, you said you're doing banking out of a box. I would have imagined that Thought Machine and you kind of compete, don't you?
Not quite. So firstly, Thought Machine and Audax are sister companies, right? But both portfolio companies of Standard Chartered. Standard Chartered has a minority stake in Thought Machine, which is public, so we can talk about it. Not quite. So we have all these layers. We have a product engine. Our product engine is limited to a specific use case of deposits. It's comprehensive. It's stable and at scale, but deposits and unsecured lending. Thought Machine specializes in that particular box, which is the product ledger, the product engine, and to some extent a party management system. And it's based off their smart contract technology. So for us, they're very complementary. If I were to talk to a bank, right, and the bank says, I want to launch a digital bank today. I want to get the market fast because speed is of the essence, but I need something that will run at scale. I would say, take Audax, plug in the issuer processor and plug in the risk engine, go into in the cloud and go, right? But that's 6 months later, once you've launched and you've rolled out a deposit product and a slight lending product, you're going to need more things. You're going to need more things, which Audax is not built for. Audax is built for speed and comprehensiveness of the stack. You're going to need to plug in a second, a third product engine to be able to do multiple things. And Thought Machine becomes very, very complementary from that perspective.
Fair enough. So so I guess you guys have said, let's collaborate, obviously with a sister company, and then you'll collaborate. I'm assuming you work with a number of other fintechs too if you have to fill in the gap, right? Because why wouldn't you?
Yep.
Right? Or are you looking at saying we need to continue building product capabilities in-house?
No. Of course, we will never get into the issuer processor business, for example.
But that I agree.
It's too complex. Card management is too difficult.
Yeah.
So as you have seen, we have announced a partnership with Paymentology.
Yep.
And at Seamless. So that's going to be our global partner for that. We're also talking to a number of other partners for other parts of the stack. We will have a partnership for API gateway at the top at some point, and a few more players on places that we don't want to build. We want to focus specifically on, I wouldn't say the word light is misleading, but a light core engine with the data, the engagement, the security, and the front end with the operations layer. That's all we want to do for now.
But you're also becoming an orchestrator then, right? Because you're bringing Thought Machine if it's required, you're bringing Paymentology, you just mentioned an API layer. So you are becoming an orchestrator.
So there are two ways to look at the orchestration conversation, right? There is the orchestrator in the composable banking approach, which is let's have multiple connectors and have 30 different vendors on the stack. I find that to be challenging from a cost and total cost of ownership perspective. It's going to be a $50-100 million setup
Plus
cost.
there's a certain risk associated
Correct.
with such
operating risk, operational risk, multiple vendors, RCA becomes interesting. So what we are doing is we are optimizing for operational risk while optimizing for efficiency of delivery. We think that this part of the stack, which is the front end, the data layer, the customer journeys, the operations, it should be in one pre-integrated solution. And things that already have market-leading capabilities like an external product engine, an external risk decisioning system, a card issuer and an issuer processor, those things exist and we should plug them together. In this setup, you have 4 or 5 vendors that run your entire bank stack rather than 35 vendors.
Fair enough.
Yeah.
Fair enough. Last question.
Sure.
Southeast Asia is massive. Asia Pacific is even bigger, right? I'm a particular fan of what's going on, for example, Vietnam. Thailand is an exciting market. You're already in Indonesia and there's a lot going on. There's Malaysia. Singapore, yes, small, but there's a lot of interesting activities which go on and so on and so forth. Why the Middle East?
Why? Well, the middle...
Why not go after all of that? I'm sure you are, but aren't you spreading yourself too wide?
Not quite. I mean, the truth of the matter is it's a long sales cycle for banks, right? So it's not really spreading ourselves too thinly because we're targeting specific markets. Even in Southeast Asia, Indonesia and Malaysia, naturally, because we are already there, so familiar. Vietnam and Thailand, possibly, and Philippines to some extent.
Yeah, sorry, I didn't mention Philippines. Yes.
Yeah, exactly. Those are the 3 other markets outside of Indonesia and Malaysia that we are looking at. And even in the region, even in the Middle East, we are really looking at the UAE, Saudi, Qatar, and maybe Bahrain, right? So those are the key players through which there is significant progressiveness in terms of the way they think about digital banking, what the banks can do, and the various business models that can be executed on the back of a singular stack. So that's why we're looking at it. We're looking at it in terms of progressiveness and within our, I guess, engagement capability, right?
So, but I do have to ask you a question. But there is a certain amount of regulatory implications that and there is an amount of embedding that regulatory thought into the stack at the very beginning, right? It's not like you just layer regulation at the top, correct?
Yep.
Doesn't that just add too much complexity? There is some homogeneity within Southeast Asia and Asia Pac. There is some, right? I'm not suggesting the same, but there's some homogeneity. There's actually less homogeneity here, right? There are more heterogeneous markets out here. Yep. Isn't that for a young, agile startup creating, and I'm sorry, I'm pushing you a little bit here.
No, go for it.
Isn't it just creating an added level of complexity that you can do without? Because it's not like there's any shortage of opportunities for you in Southeast Asia or Asia Pac.
What complexity are you really referring to, right? So the workflow, the experiences are all configurable. So you could move what comes first, what comes second, who does what data sets are available, and the definition of the data sets, certainly that's all configurable.
Right. No, I'm talking about regulations are different, right? The way the data is managed is different. The where people are in terms of their progressiveness with regards to cloud is different, right? How agile are existing banks, IT and technology functions in terms of being able to work with someone like you, which is, cloud native, agile. I know you can do on-prem. I know you can, but you prefer to do it on cloud because it's iterative. You innovate quicker, so on and so forth. But they're all in different levels of...
No, that doesn't actually bother. We are completely infrastructure agnostic.
Okay.
Right? We can deploy anywhere. So the differing levels of maturity with regards to infrastructure
but the first deployment I know, but after that, you got to continue to innovate, and it's much harder to do it on-prem, right?
No, so what we do is we build a control plane architecture capability where we can push upgrades of the code into the bank's environment and let the bank assess the security protocols before pushing it into production. So we want to be able to create a singular code base where we continually upgrade with new client requirements and then we make that client requirement available to other clients at the same time.
Okay.
So that's not something that is unavailable today. Mm-hmm. We already have that. So by making ourselves infrastructure agnostic, I think the regulatory bits of it becomes less relevant from an infrastructure standpoint. Now, where it does become a significant, shall we say, added responsibility is when you deploy for the first time in a new market, mm-hmm. we need to configure the connectors for the data sources in those markets.
Agreed.
So for example, we need to, there will be, in Saudi, it'll be easy because in Saudi you have a single data, it's like SingPass, right? You
mm-hmm.
have a single data source of everything. Right, so then you configure that connectivity once, you're done for the first bank. And then for the second, third, and fourth bank, it's relatively easy.
Mm-hmm.
So in fact, when we deployed in Malaysia, which is a very different country from Indonesia, the 7.5 months I talked about earlier, most of it went into local data source connectivity.
Great.
Right? So most of it is that the application deployment, testing, and everything was a fraction of the entire process. So for me, I think the burden, so to speak, really is on local data customizations, not so much on infrastructure regulations.
Perfect. So before I ask you where you're going to be living in the Middle East, let me ask you this is the last question. What are the 2 or 3 learnings for banks here who are embarking on a banking as a service strategy based on your experience in Southeast Asia?
Of paramount importance is the type of partner you choose. You need to have...
The embedder, you mean?
The embedder,
Yes.
the guys on the front end.
Yeah.
You need to have a framework, which Audax is happy to provide as a recommendation, of how you assess the partner, how compatible the partner is with regards to your requirements. It's both ways, right? It's not just a partner that is progressive and that wants to do it, but a partner that also understands that a bank has specific responsibilities and obligations that they need to fulfill, and therefore may not be up for a fortnightly release of features and functionality. So that's one.
Okay.
Right? Of paramount importance is the right partner at scale with the right mindset in the right way of monetizing and commercializing the conversation. The second real learning of this is if you are going to set up an embedded finance banking as a service business, do it ring-fenced. It has to be ring-fenced. Separate risk models, separate operational risk approach, separate business teams to think through the end-to-end of how to monetize and commercialize the business and bring it to scale. Embedding it as a sub-department within an existing business will lead to a lot of challenges because is your existing business good enough or understands third-party data and analytics to be able to run risk models for mass market penetration and lending, right? Not sure. So it really does depend on the bank, but I would say ring-fence the team with the right mindset, find the right partner. Those are the 2 big things. I mean, the technology conversations will fall in under one of those 2 when the time is right.
And we'll do it. Well, Kelvin, thanks for coming in. I know you're very tired. Actually, both of us are a little bit tired. We're on the back end of 2 sort of intensive days at the Dubai FinTech Summit, which I think went well this year. I think they did a much better job than last year, which we expected to. It was bigger, better, and I think some of the speakers were actually quite interesting. You heard some interesting stuff. I wish you the very best. I'm sure we're going to keep talking. It feels like we talk pretty much every week right now, right? Because we're swapping emails and stuff like that. But best of luck with with Audax, not just in the Middle East, but overall. I think what you're doing is fascinating. I can see the commitment that you have and the enthusiasm you have, and I think that definitely is contagious. And I'm sure you can spread the contagion here. I personally think if we are able to realize half of the potential of BaaS and embedded finance, I think the world of financial services is going to look very different. And I think we're going to go beyond just retail. I think we're going to start addressing some real important concerns for the small and medium enterprise businesses, and who knows, we go further along into corporate banking and stuff like that. But with that, thank you. Have a good evening. I think you owe yourself a bit of downtime, and so do I.
Thank you for having me, Arjun. Always a pleasure.
Pleasure. Right. So, ladies and gentlemen, that was Kelvin Tan. As I said, Kelvin is down from Singapore, but it seems he's going to be spending a lot more time in the Middle East. So, you see him walking down the corridors of your banks or your insurance companies or your retail or telco firms, then you know what he looks like now. It was good to have him. This has been an intense 2 days in terms of the number of fintech founders that I've been able to interview. I'm actually firmly tired, but with that, I'll say goodbye and see you next week.